Alright everyone, Cowboy Trades here. Welcome back to the channel for another update on the market. So, consumer price inflation is going to bottom in the month of June at 3.1%. Let's talk about it. Before we dive into tomorrow's CPI report, talk about what I'm expecting for CPI for the next 6 months and why I think we are about to see a bottom in tomorrow's reading for the CPI. Let's provide a quick update on the cryptocurrency markets. So what has changed for Bitcoin in the past 5 days as I've been away from the markets? I told you in the last video I was going to be away for a little while because I was going for a kendo grading on the other side of the country. In the past 5 days, literally nothing's changed, so we're going to provide a quick update. We're still looking at the same charts, we're still looking at the same support and resistances. Really, like I've been saying for a little while now, the reason why I've gone from daily uploads to maybe uploading once a week or so is because we've been the same price for the past 21 days. I can't in my right mind make a video every single day. Hey guys, we're the same price as yesterday. Hey guys, we're the same price as yesterday. Everything's very boring. We're waiting for the macro analysis to play out. In the lower time frames, go and touch some grass, go enjoy the sun, guys, because you know, right now, this is not the time to be looking at cryptocurrency charts every single day. If we are looking at the asymmetrical triangle, which we have drawn out, you can still see we are stuck underneath the resistance of the asymmetrical triangle. Yes, the price target of the asymmetrical triangle breakdown is still valid at 28,500. It's not the most important at this moment in time. Yes, it's valid because we are still stuck underneath the resistance, but more likely the more this chops and the more we break up, down, up, down, up, down, this is just looking more and more like a bar pattern and letting me know that when volatility does finally come back into the markets, we're probably going to snap through these levels very, very quickly. So looking at these zones, as we've discussed in previous videos, you can see these blue boxes where the range has been trapped in, has been respected thoroughly throughout all of these data points. Over here, you can see the blue box and the asymmetrical triangle support was held very, very nicely. Here, the blue box and the asymmetrical triangle resistance was respected very thoroughly. Again, here, asymmetrical triangle respected, blue box respected, asymmetrical triangle respected, blue box, blue box, blue box, and now we're just sat underneath the asymmetrical triangle. So in the lower time frames, like I said, go touch grass, go enjoy the summer. This is not the time to be looking at the charts every single day. My price target in the lower time frames is still kind of around this 28,500 level from the asymmetrical triangle breakdown. In the higher time frames though, this is just looking more and more like a bar pattern which is developing. We did talk about this in the last couple of videos. The price target of this, in my opinion, is all the way down at the neckline from where this major snap to the upside originated. This is going to be round about 24,700. If we come over to the weekly time frame, you can see this would be beautifully coming into correlation with this trend line, which we did hold as support on the 12th of June a couple of weeks ago. I do think we're going to be coming back down to this level, especially as in the higher time frames, we are absolutely getting stuck underneath 31,000. If we look, like I said, really boring right now. If we look at the past 4 weeks, we've been trending sideways, stuck underneath 30,000 for 1, 2, 3, 4 weekly candle body closes. On the weekly as well, you can see the stochastic RSI did take a run up for the past 3 or 4 weeks, mainly just because of what happened in this one candle over here. And since then, it's been pushing up and flatlining. It looks like in the next week, we are going to see a flat line over on the stochastic RSI. Short-term moving average is already starting to turn down from 60, more like turn down / sideways. I would like to say don't underestimate how big of a move to the downside we can have if the stochastic RSI capitulates, even though it is at the heart line right now. If we do come over to 2018, we can see the stochastic RSI here, the short-term moving average topped out at 66, the long-term moving average topped out here at 58, and at this point here, you would have thought one of the most major moves would happen from the top of the stock over here. We did have a rather sizable move. This was a 70% drop. However, as you can see where the stock topped right here and we broke down, we had a very similar correction, about 63% or so. So whether you're having a stochastic top from round about 100 or round about 50, 60 or so, you know, these moves can still be very drastic. So like I said, in the macro time frame, there is really not too much to update. Everything is very, very boring right now. I probably won't be posting daily uploads even though I am back until we see some more significant developments in the market. I will, however, be updating altcoins again in the next few days or so, getting all that content out, and following tomorrow's CPI, if we do see a major move in the markets, I will obviously come back and let you know what my thoughts are. Total cryptocurrency market cap still breaking down lower highs in the past few weeks. We're still looking like we're making this head and shoulders pattern right now. Neckline at 995 billion. Price target of the breakdown after breaking down from the neckline is around about 744 billion. If we come over to the total altcoin market for the past 2 weeks, we have been stuck underneath the 200-week moving average. If we do close a weekly candle body beneath 560 billion, very bearish for altcoins. We are beneath the bull market support bands, beneath the weekly EMA ribbon. So I do think altcoins right now are in a major position of weakness, and I think I'm coming back to make these altcoin updates at a very critical time where a lot of these altcoins are running into major levels of resistance, and the ones that aren't running into levels of resistance, which I do cover like Cadena, etc., are looking like they're coming down for new lows very, very soon. So I will update all of these in due time, don't worry. Now I want to wrap up the cryptocurrency news today with a small news segment because I'm seeing a lot of posts like this all over social media, in my Discord, over on Twitter, etc. There's a lot of, once again, quote unquote analysis predicting 100,000 Bitcoin, 120,000 Bitcoin. We're seeing it from banks, hedge funds, etc. I want to talk about, is this bullish right now? Because a lot of people seem to forget what happens in the ebbs and flows of the cryptocurrency markets. A lot of cryptocurrency traders misinterpret this news based on the fact that they don't have the prerequisite knowledge of what is happening in the backgrounds when these large firms, companies, banks say this type of information. So right now, once again, we're seeing this all over social media. Analysis, banks are once again predicting 100,000 Bitcoin, 120,000 Bitcoin, $1 million Bitcoin, etc. What happened the last time they came out and said this? Because pretty much all the time, these analysis, these banks are always saying Bitcoin is going to zero. And then every now and then they come out for maybe 3 months or 6 months, maybe a year, and they're always very, very bullish on Bitcoin. When does this happen? This always happens when they want to sell. People forget about this. If you come over on social media, do you remember the last time banks, quote unquote analysis, all of these news firms like CNBC came out and were predicting that their analysis are calling for 100,000 Bitcoin? Well, let's look at some of these articles. January 2022, Bitcoin will rise to 100,000. October of 2022, Bitcoin will shoot to over 100,000 in 2023. If we come over to the Independent, late December 2021, they quoted that several of their crypto market experts contacted by the Independent were predicting for Bitcoin to hit 100,000 in 2022. You can go further. You can look at Yahoo, you can look at Capital.com, you can look at Forbes. A lot of companies, a lot of CEOs, a lot of banks, a lot of institutional money was coming out and saying that Bitcoin is going to massively higher price targets. Now, if we look at, this time zone coming into the end of 2021, what was this? This was the top. And what were the institutional money doing following the top in 2021 and throughout 2022 when they were predicting for higher price targets? Well, if you come over to the whale wallets, addresses with more than 1,000 Bitcoin, what were they doing when Bitcoin was topping out, when all of these quote unquote analysis banks, large firms were coming out and saying Bitcoin is going to hit 100,000? They were putting out all of this news that their analysis were predicting this at the pretty much exact top. They were literally using retail traders as liquidity. They were using retail traders as exit liquidity so they could just sell at higher price targets, or they could offload all of their bags without the markets dumping. The best way, if you are an institution, to sell your cryptocurrency at the best prices, because obviously if you've got a ton of cryptocurrency to sell, you're going to start selling that. Maybe you want to put an order through of 50,000, 100,000 Bitcoin. If you do that all at once, you're going to dramatically drop the price very, very quickly, and you're not going to get the best price for your cryptocurrency. So what is the best thing to do? Sell 10,000 Bitcoin, then put out a news article that your analysis are predicting 100,000 Bitcoin. Watch the price edge up a little bit, sell another 10,000. Then you tell the news outlets to report on these stories that analysis are predicting for 100,000 Bitcoin, sell another 10,000. Then you talk about analysis are predicting for $1 million Bitcoin, sell another 10,000. This is how these institutions work. They tell you one thing and they do the complete opposite. So if we are looking at institutional addresses right now, if once again these analysis are predicting for Bitcoin to reach much higher price targets, why aren't they buying? They're not buying whatsoever. They're really perching up for retail to gobble up this news and become exit liquidity. So stay very careful, my friends. I've seen this play out time after time again. When you start seeing banks and large companies, unless there's someone like Michael Saylor coming out and saying that Bitcoin is about to experience an explosive growth rally to the upside, then you know that you're late to the party and they are about to sell on retail traders. So a lot of retail traders think this is going to be bullish. This is not bullish news. Let's see how this plays out. The last time that these analysis banks, etc. came out, all of these news outlets were saying 100,000 Bitcoin, 100,000 Bitcoin. they were literally selling as they were putting out these news articles. Now let's get into the most important topic of today's video. This is the CPI numbers that will be coming out tomorrow, and I want to talk about why I think inflation is going to bottom tomorrow, round about 3.1%. Before we get into that though, tomorrow, CPI inflation, that is on Wednesday. On Thursday, we have PPI inflation. Also on Thursday, we've got initial jobless claims, and on Friday, we do have consumer sentiment. Wednesday is really going to be the most important though, especially as if we do come over to headline CPI year over year, currently at 4%, this is predicted to drop to 3.1%. US core CPI year over year is predicted to drop from 5.3% down to 5%. And if we come over to the economic calendar, you can see CPI month over month in June is expected to continue accelerating up to 0.3%. So let's talk about how likely it is that we could see a drop down to 3.1% year over year inflation. Well, I actually think it's quite likely. Now, hear me out. We're at 4%, so a big drop down to 3.1% would probably at least be short-term bullish for the markets. And here's why I think it's somewhat plausible that we could see a drop down to 3.1%. Now, let's come over to this chart over here. Now, what we're looking at over here is the US CPI. This is not on a year over year basis. This is purely the US CPI index. Now, while the year over year, which by the way is of course seasonally adjusted, is coming down, if we look at the actual CPI index, as I'm sure all of you know by going into the store, it doesn't really matter that CPI is up, 4% this year. If you're coming over to the CPI index, we're making new all-time highs every single month. Now, how is the CPI index coming up and making new all-time highs every month, even though the year over year is coming down? Well, this is because it's year over year. So if we look at what happened from June of 2022 all the way up to the potential data point, which will be coming in June of 2023. Once again, if we are coming over to the month over month, June is expected to increase to 0.3%. And this would put the CPI index, not bound by a year over year basis, all the way up here at 3.05%. Now, if we measure from last June all the way up to this June, this would be round about, I've probably fat fingered this a tiny bit, but 3 to 3.1% inflation. So I don't think it's impossible. Once again, I think month over month is going to increase, but I do think that we're probably going to see about a 3% to 3.1% inflation come in tomorrow. Now, here's why also we could see a massive drop. Now, if we look at how much CPI increased from May to May, you can see over here, May of 2022 over to May of 2023, this is a 4.1/4% CPI year over year, which is why we're currently seeing that 4% headline CPI right now. However, look at how much we increased in May, 4.1%. Look how much we increased from June, a measly 3%. So we had a massive increase of about 1.4% in a singular month from May to June in the previous year, 2022. So this is why I think it's very likely that year over year is about to come down dramatically, because last year, this data point over here from May to June went absolutely parabolic. And right now, month over month isn't predicted to go parabolic. It's expected to move up 0.3%. So that's very likely why we see the CPI index come up to 3.05%. And then if we're looking at where we were from June to June, you can really see how these numbers are calculated. A lot of people don't even know this is a chart. A lot of people only look at CPI year over year and think this is the end all be all. The US CPI year over year, this is calculated using this chart over here. This is really one of the most important ones, which is very overlooked. But however, this is why I think we see a drop to 3.1% following tomorrow's data point. But here's where things get interesting. So of course, we're measuring CPI in a month rear, so we'll find out the June numbers tomorrow. Like I said, this is expected to come up to this orange line right here at 305.2. But here is where things get interesting. From June to June, you can see this would be a 12-month time period. You can also see, once again, we're expected to see around about a 3% increase in CPI. But what is happening right now? If we come over to the CPI index, you're seeing it make new all-time highs every week. If we look at where we bottomed out in December, we made new all-time highs in January, new all-time highs in February, new all-time highs in March, April, May, and as we can see by the month over month forecast expected to increase to 0.3%, we're very likely to see this CPI index push up to the forecast of 305.219, making new all-time highs. So what does this mean for inflation inflation throughout the rest of the year? Well, here's where things get interesting. The reason why we're seeing CPI drop year over year right now, even though the CPI index is pushing up, is because in the prior year, we saw an absolutely parabolic run up for about 12 months straight. But what happened 12 months ago in June of 2022? Inflation stopped going parabolic and it went sideways for 6 months, from June of 2022 all the way to December of 2022. 6 months, it did not increase, decrease, it just stagnated and went sideways. So what does this mean for the markets? Well, let's continue to expect that we move at this same trajectory that we are currently moving at this moment in time up until round about December of 2023. I personally think with everything that's going on in the economy, I'm not really going to mention politics in this video. I'm sure you can deduce and look at what's happening in the economy right now and figure out what's going on for yourself. But it's very clear that inflation month over month is still very likely to continue to increase because of the policy which is currently happening in the US. So what does this mean? Even if we don't accelerate inflation, even if we just keep on moving at the same pace that we're currently moving at, this would mean that following this data point here in June of 2022, if inflation bottoms, that is probably going to see the bottom in inflation, because if we come over to July, you can see this is the same data point. If we itch up another month from July to July, we could see the following month increase to 3.6%. We could see the following month after that increase to 4%. We could see the following month after that increase to 4.4%. We could see the following month after that increase to 4.4% again. And then following these data points, you can see inflation actually started to come down again. We could see 5% increases in inflation. We could see 6% increases in inflation by the end of the year. So this is really what I want to highlight. I still expect the CPI month over month to continue pushing up further and further and further. And like I said, if we look at this point where we were at last year in June of 2022, we went sideways in terms of inflation for 6 months. So inflation month over month just needs to slowly keep on creeping up. If it keeps on creeping up at the pace that it's creeping up right now, we'll see 6% inflation again by the end of the year. What happens if we see another one of these bursts to the upside again and inflation just starts rising? Well, we may see the CPI index year over year start coming back up to these all-time highs at 9.1%. So like I said, I think in the immediate short term, inflation is going to come down dramatically tomorrow. However, in the next month, I think it's going to start coming up and up and up and up again. So this is what I want to warn you about. We may see a short-term rally tomorrow. It is also arguable that this is somewhat priced in, and I believe the bond market is rallying because it expects month over month inflation, like myself, to continue increasing to the upside, and it's also going to be registering these new all-time highs in CPI month over month from flat data points for the next 6 months. Inflation year over year increasing for the next 6 months or so, potentially even longer, would definitely be very, very bullish for government bond yields. Remember, only last week we saw new all-time highs for the 2-year government bonds. I think this is about to start going on a rally to the upside. If we're looking at the iShares TIP ETF, which is inversely correlated to equity markets and Bitcoin, this is so close to making new bear market lows. This has just broken down from a massive bull flag. And if we are coming over to the daily time frame, this might be better drawn over on the 4-hour time frame. You can see that we're making this pattern once again. It looks like we're about to break down, or we are breaking down from a bear flag at this moment in time. And this bear flag is likely going to be another continuation pattern, which is going to take the iShares TIP ETF down into new all-time lows for this bear market. So there we go, my friends. Those are my full thoughts on Bitcoin, the news that's circulating around Bitcoin, the economic data coming out this week, and why I think that the CPI is going to bottom tomorrow in June. And then from these data points throughout the rest of the year, we're going to see CPI start to monumentally increase from around about 3 to 3.1%. But today, that's all I've got. If you did enjoy the content, make sure to let me know down below by leaving a like and a comment. Share the videos with your friends. If you want to further support the channel, feel free to click the join button on YouTube and become a member today. Make sure to follow me over on Twitter at 618_cowboy. Even when I am away from the markets for a few days or so, every now and then, of course, I let you know in the videos if I am going to be away for a few days. If there is anything important to update during the times that I'm away, I will post it over on Twitter at 618_cowboy. I haven't done a lot of posting recently because, as you can see, everything's very slow, everything's very sideways, and everything is very boring. I think things are going to start materially changing very, very soon. But let's leave it here for today. It's been your boy Cowboy Trades, my friends. I'm out. Peace.